Imagine a world where the US dollar's dominance as the global reserve currency is challenged, perhaps even eclipsed, by a new financial entity introduced by BRICS, a coalition of rapidly growing economies: Brazil, Russia, India, China, and South Africa. Their vision? A new currency that could reshape the landscape of international finance, potentially lifting billions in developing nations to a level of unprecedented economic freedom. But as with any ambitious plan, there are shadows of uncertainty. Could this radical shift also destabilize the global economy? The motivation behind the BRICS coin. A shift from US hegemony. The rationale behind the BRICS currency, or BRICS coin, is rooted in decades of economic frustrations. As the dominant currency, the US dollar is widely used in global trade and held in vast quantities as a reserve by central banks worldwide. This dollar dominance gives the United States immense leverage over other countries, as its monetary policies have far-reaching impacts across borders. For years, BRICS nations have voiced their discontent with a financial system that prioritizes US interests. The BRICS coin represents a challenge to this status quo, a vision of a multipolar economic world where financial power is more evenly distributed. In practice, the BRICS coin could reduce the reliance of these countries on the dollar by facilitating trade and financial transactions among BRICS nations. The impact? If successful, it could be enormous. BRICS countries, collectively representing around 40% of the world's population and over a quarter of global GDP, would have a currency that allows them to set their terms, not bow to the ripples created by the Federal Reserve's interest rate hikes or the value fluctuations of the dollar. Structure and mechanism of the BRICS coin: digital or pegged. How would such a currency function? Speculation suggests two primary structures. One option could be a digital currency, resembling existing cryptocurrencies but with a governmental framework that ensures stability and transparency. Alternatively, the coin might be pegged to a basket of the BRICS national currencies: the Chinese yuan, Russian ruble, Indian rupee, Brazilian real, and South African rand. This pegged approach would aim to combine the economic strengths of each nation while mitigating the drastic value fluctuations associated with traditional cryptocurrencies. Experts argue that a pegged model could lend the BRICS coin a stability akin to traditional reserve currencies, making it a viable option for international trade. For instance, if it were pegged to a diversified set of strong currencies within the BRICS alliance, the BRICS coin could potentially resist shocks to any one country's economy. If designed well, it could serve as a safeguard for emerging markets, shielding them from inflationary pressures or sudden economic downturns in the US economy. Real-world challenges: gaining global acceptance. For the BRICS coin to truly disrupt global finance, it must gain acceptance far beyond its member nations. Many countries hold US dollars in reserve for stability and ease of trade, and for the BRICS coin to be competitive, it would need to foster similar levels of trust. The barriers here are considerable. For example, adopting the BRICS coin would require a shift in how countries approach their foreign reserves, a complex transition that could take years or even decades to unfold. Furthermore, the BRICS coin must demonstrate resilience against political and economic volatility, an area where it faces notable challenges. BRICS nations have a diverse array of political and economic interests which occasionally clash. Russia and China, for instance, have faced international criticism for their political practices, while India and China have experienced border tensions. Could such diverse nations commit to unified monetary policies? In a currency alliance, political harmony is almost as essential as economic compatibility. The Eurozone, despite shared culture and geography, has faced ongoing difficulties due to differing fiscal policies among its members. How will BRICS fare with even greater political diversity and no shared geographic base? The dual nature of the BRICS coin: economic liberation or geopolitical tool. Supporters of the BRICS coin see it as a liberating force for emerging economies, arguing that it could make international trade cheaper and more efficient. Developing countries that currently pay a premium to trade in dollars due to exchange rate volatility, transaction fees, and fluctuating US policies could avoid these costs by trading directly in a common currency. A successful BRICS coin could also enhance economic integration, paving the way for cooperative projects in infrastructure, energy, and technology across BRICS countries. But there are skeptics who see the BRICS coin as more than a mere financial instrument. They warn it could become a tool of geopolitical leverage, used by BRICS countries to expand their influence over less powerful nations. For example, a small country dependent on trade with BRICS nations could find itself forced to adopt the BRICS coin, effectively tethering its economy to the policies of the BRICS bloc. Some critics worry that rather than decentralizing power, the BRICS coin could simply shift it from the US to a new set of influential powers, with developing nations still at the mercy of larger economic players. Transparency and governance, building global trust. A crucial issue for the BRICS coin will be transparency. To be trusted on a global scale, it would need to operate under clear, enforceable rules that prevent currency manipulation and ensure compliance with international financial standards. This is particularly important as countries like Russia and China have been criticized in the past for lack of transparency in economic matters. An opaque currency management process could deter potential investors and prevent the BRICS coin from achieving the necessary legitimacy. A system that inspires confidence would require robust checks and balances, perhaps involving independent oversight or a governing body that can operate beyond the direct influence of any one BRICS nation. Without such measures, the risk of manipulation could undermine the very trust BRICS nations are trying to build with this currency. Potential ripple effects on the global economy. If the BRICS coin gains traction, the implications could be far-reaching. In the US, a diminishing dollar influence could lead to higher import costs, as other nations might no longer feel compelled to price goods in dollars. This could lead to inflationary pressures in the US economy, impacting everything from consumer goods to housing prices. On the flip side, BRICS and other emerging markets could benefit from lower borrowing costs if they transition to BRICS coin-based loans, potentially fueling economic growth across developing regions. Additionally, the financial world could witness the rise of multiple currency blocks, where different regions primarily trade in specific currencies: US dollar, euro, BRICS coin, and perhaps others that emerge in response. Such a multipolar currency landscape could increase global competition but also introduce complexities in currency exchange and international investments, reshaping how businesses and consumers alike interact with the global market. Will the BRICS coin redefine global finance or fade away? The introduction of the BRICS coin represents a direct challenge to a financial order that has long been dominated by the US dollar. But its success is far from guaranteed. To succeed, BRICS nations would need to maintain a level of economic and political alignment that has eluded most international alliances. They would need to earn global trust through transparent governance and sound economic policies, convincing the world that the BRICS coin is a stable, reliable alternative to the dollar. The stakes are monumental. If successful, the BRICS coin could herald a new era in global finance, providing a counterbalance to US financial influence and fostering a more diverse economic landscape. But if the coin fails, it could destabilize the very economies it aims to protect, amplifying financial risks in an increasingly interconnected world. As the BRICS coin evolves from concept to potential reality, it raises profound questions about the future of global finance. Can a multipolar currency world foster stability, or will it lead to greater fragmentation and economic volatility? Will the BRICS coin empower developing nations, or will it introduce new forms of dependency? Only time will tell if the BRICS coin will become a cornerstone of a new financial era or a fleeting experiment in a complex, rapidly shifting global economy.